Good morning, everyone. Welcome to our Thanksgiving Kickoff 2018. My name is Raul Aurora. I am the Coaching and Education Coordinator here at Trading Winds. Always my pleasure to host these sessions. This is our fourth annual, and I think a lot of you have been with us for all four of these events. We're looking forward to it. Lots of great speakers today, including our very own Vince Vora. I'm just waking up from my food coma, Vince. I don't know about you. Are you waking up from yours as well?
Yeah.
Yeah, just in time to make your presentation, right?
Exactly.
Yeah. Hope all of you had a terrific holiday weekend. First order of business is always to make sure you can hear us and see us. If you can, please let us know by putting in some kind of note in your chat box so we know that we're coming through to you loud and clear and in a somewhat clear format. Thank you, John from Ohio, first one in today. Clarence, Tim, thank you to all of you. We'll get to all the names throughout the session. As I said, this is our fourth annual kickoff. There's various ways you can get in touch with us at the show here today. You can email your questions in, or if you're listening on the phone, if you're on the web, it's easy. You can put your questions in the chat box. I promise you're going to have a good time here over the next couple of hours. Vince, good morning to you. This is Vince Vora, our head trader at Trading Winds. He's been trading for just over 29 years.
Over that. Thanks for trying to make me younger, but no, it's been a little longer than that.
Good
morning.
It seems like I'm aging you when I say you've been trading for 30 years or 30 plus, so just over 29 years. During the time, you've seen all kinds of interesting markets, but every time we have a discussion about this, you always say, yeah, you know what? Markets are similar, but this one is different.
It feels different, and you know, speaking of interesting markets, we're in one right now. I think we're at a very important point with these markets, and I think this coming week is going to be very important. When you've been involved in the markets as long as I have and watched the screens as long as I have, sometimes you get a gut feeling for things, and it's not always right. And I hope I'm wrong this time, but the gut feeling I have for the week coming up is not a very good one. We can talk more about that throughout today's session, though.
You had talked, I said, did you buy anything for Black Friday? You said, no, I'm waiting for Black Monday. And I said, oh, you mean Cyber Monday? And you said, no, Black Monday, because you're expecting a bit of a drop.
I think so. But I hope not. But, time will tell. But certainly that's where all the signs are pointing right now.
All right, so fourth annual Thanksgiving kickoff. You're gonna bring back one of our most popular courses. It's a course about options. Mm-hmm. We did this back in 2016, mm-hmm. and as I said, the market's changed, so a little bit of the dynamics and wrinkles around each training session change over time. What is it that we're going to be doing today?
Well, today, we don't have a lot of time, so we'll stick to the basics. I'll go over just a couple of different option strategies you can use that are simple and easy to follow and carry very limited risk, which in this market is what you should actually be looking for. When you're in an environment like this, you should always, your first thought should be, how can I eliminate risk? And these allow you to be very active and continue to trade and continue to give you some pretty good profit opportunities without taking a huge amount of risk. So I'll cover those, and then I'll tell you how you can get the rest of the course that we have, the offer, where we go into much more sophisticated option strategies.
All right, it's just about 4 minutes past the hour, 7 a.m. West Coast, 10 a.m. on the East. Let's get going.
Excellent. Again, welcome everybody. Thanks for joining us. And I'm glad we can be here together on a Saturday morning. Let's talk about options trading.
All right, I have good news and bad news, Vince. We do have a speaker. Our next speaker, Troy Epperson, is ready, but the following speaker, Jonathan Rose, is running a bit late. So after Troy's presentation, we will come back and we'll answer some more questions on your presentation and topics. All right, we're excited to have Troy Epperson with us. Let me give the presentation controls to him, and we will give him a resounding introduction and get him going.
Great.
It's 50 minutes of material there. It's pretty good. Troy, can you hear me?
Yes, I can.
How are you, sir?
Good, thank you.
Good to hear. Let me get Vince to give you a proper introduction here.
Welcome, Troy. And for everyone here, in the early 90s, Troy Epperson started trading a renowned hedge fund, then became head trader on a proprietary trading desk. In 2003, he started successfully trading his own money. And besides his full-time job as a trader, Troy is one of the top instructors for NOFT traders, teaching futures and stock traders how to use order flows to earn full-time professional trader incomes by trading with the institutions instead of against them. Troy, we're all really looking forward to your presentation. Thanks for joining us on a Saturday morning. It looks like I can see your screen. It looks like we're all set up and ready to go. So I'll hand it over to you.
Thank you very much. I really appreciate that. And wow, Saturday on a Thanksgiving weekend. But hey, you know what? That's when people have time to check stuff out. So I am a little froggy this morning because it's a little bit early, but sit back. We're going to have some fun. I think you guys are going to enjoy this. First of all, I have to tell you that I'm not a sales guy, okay? So I'm a trader first, educator second, sales guy is the fourth or fifth, whatever. So you're not going to get a super heavy-duty sales pitch. There will be one at the end, but I promise it's going to be very, very short. This is primarily about order flow and decoding order flow, and it's about education. We do have a link that I will try to put in the chat here in a little bit to purchase our product. Our product is called Order Flow Pro. It's regularly $29.99, but the special webinar Thanksgiving Black Friday idea here is $9.95, so it's a big, big discount. And that's it. I'm not going to tell you anything else till we get to the very end, and I promise even at the very end it's going to be very, very short. Because let's face it, it's not fun being the sales guy, but it is fun to be the guy who gets to demonstrate the product, which is really, really awesome. So we'll jump right into that. So NOF Traders believes that there are three components for trading successfully. First of all, you have to have a trade location where the institutions are aggressively buying and selling, and we're going to help identify those. We're going to show you how we identify those. Second, once you have a good location, you have that place where this is where I'm going to trade, then you need to know that, yeah, this is actually where I want to trade. So the order flow kicks in and confirms that that trade location is a good place to make a trade. Now, before I even go to the next section, I want you to know that trade location, while we provide trade locations for you, a trade location can be any system, anywhere, anyhow, whether you're a Fibonacci guy, whether you are a some sort of black box system that you subscribe to, it just doesn't matter. When you identify a specific place to trade, whether it's a moving average crossover, whatever it is, you're going to move to part two. So you don't have to use our system. Our system is great, but you can adapt your system to this, and that's one of the cool things about it. You don't have to learn a new system. You just have one extra level of order flow confirmation. So the order flow is sort of what says, yeah, go ahead and take this trade right here, right now. And so you can adapt an existing system, or you can learn our system. Either or, we're okay with that. In fact, most people, what they do is they start out with the system they're currently using, they add order flow to it, and then they come back and learn our system as well. So it's pretty cool. And of course, the last part of trade, any kind of trade after your entry, is a trade management. So how to reduce the risk and boost profits while trading with the institutions. And the order flow gives you the answers to this in both directions. It gives you the trigger to buy, and it also gives you the trigger to exit. So it's all integrated into a simple way of trading. Those are the three components. So the first component, trade location, is pretty simple. It's basically telling you where to trade and knowing this in advance. So we put out levels. I'm going to show you a picture of these dashed blue lines here are some of our levels, and these are put out on a weekly basis. So you know well in advance where these are going to be. And you can see that there's lots of times when it comes extraordinarily close to those levels, maybe even to the tick, plus or minus a few. Now, obviously, there's going to be places where every level like that gets completely run over. So levels are good, but they're never an absolute. You're never going to park an order. It's like a Fibonacci. If you park an order at a 37, or sorry, 38, or a 50, or the 61.8, you're going to get run over a certain percentage of the time, right? I mean, that's just going to happen. Just like every trade system is going to spin off some losing trades. But the big advantage is to have, number one, have good trade locations, and second is to have a way to determine if you're actually going to take this trade. And the order flow component steps in and says there's too much momentum coming into this level. I'm not going to take this trade. I'm not going to take that trade. So you'll cut out these bad trades and you'll keep the good trades. And that's exactly what we want to do to enhance your existing system. Your existing system says you want to go short here. Well, the order flow is going to say, nah, you better not do that. And if you think about this, if you could cut just one losing trade from your system every single day, 200 trading days a year, you can see how quickly that becomes very, very advantageous. Very, very cool stuff. Now, we also, in addition to this, we have those levels. We have some intraday levels that get spun off intraday, and here's an example of one. This is called our stacked zone, and it comes in and gives us a level that when you come up and test this level, you want to go short. And I don't want to spend a lot of time. There's a lot of stuff on this. We're going to get into the details of this in just a second, but I just want to show you that there are both trades that are trade locations that are generated well in advance, and then there's also trades that are generated intraday. So we pretty much have you covered. There's never a lack of potential trade locations. That's usually not a problem. Let's go to the next one here. So order flow, this is where the meat of what we're doing is, and it is knowing when to trade. So knowing where to trade is only part of it. You still have to know when to pull the trigger on the timing of that, and if you're going to do it at all. So knowing when to trade, extraordinarily important for entries. And of course, we all know this, but a good entry is usually a winning trade, right? So the entry becomes extraordinarily important. Whether you're late to the party or early to the party could mean that you get stopped out, even though the overall direction of the trade was correct. If you're early, you can get stopped out before it turns around. If you're late, sometimes you'll get a little retrace and it'll come back and stop you out because your entry wasn't as good. So you all have experienced that before, and the order flow is really the piece that gives you the when to trade, when to pull the trigger. Again, very, very cool stuff. Now, the majority of you are using some form of candlesticks, okay? Approximately 95% of all traders use candlesticks. And I used to use candlesticks as well. That being said, what do we know about a candlestick? We know the open, the high, the low, and the close, right? And we can see the price movement in between those. And that's really all you can see from a candlestick. It doesn't tell you how the candlestick was actually formed. It just shows just sort of the end result, the open, the high, the low, and the close. But we're going to take the candlestick concept to another level, and another level is what we call a footprint chart. So you can see that I have highlighted here whatever this is. We call this a footprint chart, but this is the candle body is highlighted. So the candle is still here, It's just that we're kind of exploded the candle so we can see numbers inside. So there's a wick, see the body. We've just cracked it open to reveal the data inside the candle and how it is formed. Now, a lot of people go, what in the world is this? I'm being overwhelmed by numbers. And initially, that is the reaction most people have, but we're going to color code. We're going to make this reading this information extremely easy. Now, you're probably wondering, why is this even necessary? Well, let's talk about what we do as traders. What we do as traders is we make an attempt to read price movement. We try to read the tape. We've heard that term for years and years, and we have all kinds of people who have done it very, very well. Everybody from Jesse Livermore to, in the 80s, we had Paul Tudor Jones, and we've had a lot of guys who were experts. Marty Schwartz is one I think of right off the top of my head, that were tape readers. These guys read the tape. They learned how to read the tape. They learned, what is the tape? The tape is really price action and order flow. But in the last few years, I mean, I'm dating myself a little bit, but I can remember a New York Wall Street Journal headline that said 100,000 ES contracts. It was big letters across it. Some of you may remember when that happened, but 100,000 contracts. That was obviously in the very beginning when the ES was becoming a popular contract. 100,000 contracts. Well, what do we do today? Today we do 2.5 million, maybe 6 million on a heavy day. You can't put a time and sales window up and watch every single trade go by and try to figure out what the heck is going on. Whether it's stocks, futures, Forex, the volumes are gigantic now. And watching time and sales is really a exercise in futility. It's really hard to make anything figure out what's going on watching it scroll fast, super fast, as the trades are happening. So what we do is we take that information and we dump them, we summarize it. So we have two sides of the candle, and I'm going to get into a lot more detail of that in just a second, but we have two sides of the candle here. This is the offer side, or the ask side. This is the bid side. This is just telling us where the trades are being executed. So that 83 is being executed on the bid, and 34 contracts were on the offer. Now, a lot of you are probably going, oh, big deal, whoop-de-doo. But when you start really looking at why this is important information and why we want this information, it's going to become blatantly apparent. So let's jump to the next slide. So we do have a order book here, okay? So this is sometimes called a Super Dom in NinjaTrader. It's called a trade matrix in TradeStation, and those, by the way, are the two platforms that we service, is TradeStation and NinjaTrader. And this is the order book. So you can see the orders. You see the live bid here, the offer, and current price, and where those are being executed. So when a trade gets executed, it comes across here, and this is actually a crude oil. It comes across and it gets immediately upon execution, it goes to time and sales. And time and sales then gives you this. And you can see here that this is at 10 o'clock in the morning, and there's 9:51 seconds, 10:09:51 seconds to 10:10 and 15 seconds. So this entire block, everything that's happening here is what? It's 15, 16, 16, 25 seconds. So this is 25 seconds. 25 seconds, all of this happened. Now, this is not super, super fast, but if you go to the ES, this is going to be screaming, and what this whole thing is going to be, instead of it being 25 seconds, it's going to be like 3 seconds. It's going to run super fast. So this is time and sales. Now, time and sales, you get level 2 information from the exchange, and you can see I've got greens and blues. Well, the greens mean it was executed on the offer. Blues mean it was executed on the bid. In this case, would have been right there, or actually it's right there. And so you have these two sides again. So we have the ask side and the bid side, and the information then flows based on price into the appropriate box. So this is the modern day version of tape reading. We are watching the tape, but we're not looking at it in this format anymore. This format is not any good anymore because it's going too fast. There's just no way to assimilate. If you just looked at this right here, you've got 45.39, 45.39. So the last 25 seconds we've had how many contracts run through here, and price hasn't really changed. But you'd have to be staring at this. Very difficult to do any kind of long term. So old style tape reading has really, it's just not worthy of our time. It's too hard to figure out. You spend hours and hours trying to interpret this information as it's scrolling so fast. This consolidates it. So we have a consolidated way of reading the tape. So very, very cool stuff. Now, let's talk just briefly about what it means to see a candle. So here's the footprint candle. And when I see numbers coming in here, again, this is the ask side, this is the bid side. So what is the significance of putting a number on the bid side? What does this mean? So first we have to drop back a little bit and say, what does it mean when a order gets executed on the bid? Who's doing what at that point? So if an order gets executed on the bid, we have a buyer that's got a limit order, and he's sitting at XYZ price. He's sitting at this price, and somebody on the other side, it's either somebody on the offer side who's gotten impatient, somebody wants a market order, it's a sell market order, and your order, if you're on the buy side, you're a limit order and you get executed. So you're not, as the buyer with the buy limit, you're a passive. You are a passive buyer. You're just sitting there waiting for a price to come to you, for someone to take your order. So, quote, hitting the bid is passive for the buyer, but what is it for the seller? If a seller hits the bid, who is the aggressor? That's right, the seller is aggressor. So everything that's happening on the bid side is aggressive selling. Everything that happens on the offer side is aggressive buying. Okay, so again, this becomes an aha moment. You should be going, wait a minute, what? So let's talk about the offer side. You're sitting on the offer with a limit order. Maybe you bought earlier and you're getting out. You just want somebody to hit your target. But for you to get that target hit, a buyer has to be aggressive and use a market order, or he has to hit the offer, take the offer. So the action that happens right here is aggressive buying with a passive seller. Aggressive buying, aggressive selling. Now, what does that mean? Let's break it down even farther. Well, we can now define what's going on as behavior. Now, what do we know about behavior? What we know about behavior is that it's predictable because we're all human, okay? So behavior is extraordinary. We need to think about price movement as behavior, not price moving, not how much time has elapsed and what has price done in a chart. We want to see it as behavior because behavior is predictable. Okay, I'll give you an example. We just had Halloween a couple of weeks ago. I have a 9-year-old son. We got 2.5, 3 gallons worth of candy I'm sure if you have kids, you've all gone through this. Giant amount of candy. Obviously, he can't eat all the candy at once. So we say, all right, let's put it in a box. We're going to put it on the top of the refrigerator. You can have one piece of candy per day. We put all the candy in a box. We put it on top of the refrigerator. And now every one of you who has a kid knows what's going to happen next. The moment dear old dad walks out of the kitchen, the 9-year-old son is already plotting on how he can get to that candy. I'm going to pull a chair over. I'm going to step on the chair. I'm going to step on the counter. I'm going to get to the top. It's predictable. This is what is going to happen. If you tell a kid, don't touch the hot stove, he's going to touch the hot stove. Okay, behavior is predictable. So whether you are looking at a green bar or you're looking at a red bar, I'll buzz through this very quickly. Here we'll go to a red bar. You are going to see behavior. And if we can define the behavior, we can then predict what is going to happen in the near future. So again, the bid side, always the left-hand side. Right side is the ask or the offer side. And we have aggressive sellers that are hitting the bid. That's what's happening now. We have some red numbers here in the middle. And this is on purpose to compare aggressive selling versus aggressive buying. These are always done diagonally. The comparison is diagonally because at any price level, the bid is always one tick below the offer. So the volumes are then compared diagonally. It highlights if it's a certain percentage. And what this is going to help us identify is when there is aggressive selling that is happening that is at a very high percentage versus aggressive buying, that is out of character. When it's out of character, that becomes an anomaly that we're extraordinarily interested in. This is showing me that there is some momentum coming in. Now, I know we're still looking at a lot of numbers, so let's just ballpark. What do we got? 12 to 11, 11 to 1, 4 to 3, 17 to 1, 16 to 2, 4 to 6, 13. It doesn't take much to just glance at this and see that the numbers are bigger on the bid side. That makes sense since price is going down. So it's not like I have to read every single number. I just sort of have to have an awareness of the numbers are increasing on the one side versus the other side. Not super difficult. And initially, yes, it is a little bit overwhelming, but you'll pick this up very, very quickly. So here is an example of a candlestick chart. And this is where the really good stuff is. And I'm going to give you a heads up here. I will destroy this by drawing on it multiple times. So we're going to be on this chart for a little while, and then I'll have to erase it, start over again. You can't hardly help when you start talking about this stuff. It gets exciting. I end up putting so much stuff and scrawl and scribble, and we'll look at this several times. So remember we talked about number one, we had a trade location. So trade location is this blue line. Now I've on purpose not put any kind of label on this blue line. So this could be a fib. This could be the black box. Could be the black box. This could be Troy's special number. Okay. This is Troy's magic number. Okay, this spot right here. It's completely done ahead of time, but it can be anything. It can be whatever. We're going to evaluate when price comes up to this level. We're going to evaluate what is order flow doing. So why do we look at order flow? We want to see, all we see in a candle is we see price movement. We say, oh, price is at this. Well, what's going on? Is there selling going on at this price? Or is there buying going on at this price? And that's why a candlestick doesn't tell you that. It doesn't show you that. But a footprint chart does show you that. So as we move, as price is moving up towards this, now let's back up a minute. If you saw this candle, and this candle, maybe even this candle, would you be going short? Nice move up, looks pretty good. The candles are pretty good. The tails aren't very big. This is probably a little pullback to continuing to go up, right? If you're a candlestick guy, you just don't really see what is going on here. Everything's green. You got you have 5 green bars in a row. And we do have a little bit of pullback on price here. We're pulling back but that's probably just the pause before this thing keeps going. Well, if you thought that, you would absolutely be wrong, because that is certainly not, that's certainly not what's going on there. Okay, so let me erase my mess here. Okay, so again, trade location, what is order flow doing when we get there? So as we move towards this, I'm watching these candles very intently. I get a signal here, it's called an exhaustion bar. Why is it an exhaustion bar? Because it's got a bunch of blue numbers. What do the blue numbers mean? Is that I've got a buy imbalance. Remember, we briefly talked about that. It's looking at the ratio of aggressive selling to aggressive buying. That ratio, then, if it's big enough, it's going to highlight in blue and or red. So you can see there's a red number there. So you can just glance at this bar and you see a ton of blue. That is aggressive buying big time. And there is momentum coming in here. However, and this is perfectly fine, it looks like it's breaking out of a level here, and you would expect to see aggressive buying happening as it's breaking out. However, this particular anomaly of heavy momentum and heavy percentage-wise, much more aggressive buying than aggressive selling, is also telling me that while it's getting gas to jump through this little breakout level, it's also way, way, way overdone, and it's exhausting. What we found is when this scenario happens, about 67% of the time, you're going to see a higher high. I'm going to put a higher high within 2 bars, 1 to 2 bars. So so in hindsight, we can see 1, 2. We got very close. We missed it by 2 ticks. Here's the highest high, but it's still really good. So in this case, it didn't quite jump into that, but it gave us a higher high that was the high, not quite, very, very close enough, 67% of the time. So this is a gigantic heads up that a top is, at least a minor top, is going to happen. 66% chance that when this occurs, I'm going to see a higher high that will be the high within 2 bars. So what does this do for me? Man, it's a gigantic heads up. Like, okay, we had major buying come in here, but what this is really saying is that it's so much buying that it may not be sustainable. And you should be careful and watch for the buyers to start getting tired within the next 2 bars. Well, I'm not interested in taking a trade here. I'm interested in taking a trade up here. But this is a gigantic clue moving into this bar that my buyers are starting to get exhausted. They're having that climactic buy. Now, as we move forward here, we start to see this red. So why is this red? Well, first of all, what side is it on? It's on the aggressive buy side. Aggressive sell is right here, okay? But we have this red at the top of this bar. So what is this? Well, this is aggressive buyers. So why is it highlighted in red? Well, look at the numbers inside. 4,368, 4232, 1715, 79. So what's going on? My aggressive buyers are buying less. So at the tops of these candles, I'm seeing trouble buying. The buyers are slowing down. Buyers are slowing down. Now, let's let that soak in for a second, okay? So if you can, in real time, see sellers, or should say, see the buyers slowing down, that means the buy pressure is starting to get less. Now, obviously, you had the buyers slowing down here and here and here. The key is at a trade location, which is going to be either a breakout point or a breakdown point, you want to see what's going on. So we want to see at this point, at this trade location, are the buyers slowing down? But that's only part of the story. It's not only about buyers, right? Because we have to have, for price to change directions, we need to see sellers in addition to buyers slowing down, buyers slowing down, buyers slowing down. I need to see that sellers are coming in. So to get this action of price going up, turning over, and coming down, what's happening right here? You have an equal number of aggressive buying and aggressive selling, right? And actually it has to, so buying is overwhelming buyers, 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 buyers. Slow down, slow down, slow down. Sellers start coming in, sellers start coming down, sellers increase, and price turns over. So we want to be able to see that. Well, we can. Red number, a bunch of red numbers. So as the buyers are slowing down here, big numbers of sellers are starting to come in. In fact, right here is your optimal entry, right here. Now, I would have actually taken an entry probably right here. I'd have been a little bit early because I have buy pressure dropping. I also have sellers coming in, and I'm at my trade location or very, very close to it. On this bar, I see additional sellers coming in. I'm in, shorted. What's beautiful about this method is that many times, in fact, most of the time, you have 2 to 4 bars that are the top. And so you have multiple ways and multiple signals, multiple clues that this thing is going to turn over and go down. First of all, you know it's slamming up against my special number. Remember the Troy's magic number, the Fibonacci number, the black box number. It doesn't matter. Great, I want to know where that is, but I want to see what the real story is happening when a price gets to this level. And the real story is I've got major problems on the buy side, and it's being responded to by response by sellers who are coming in. And that's the kicker. Whenever you can have buyers slowing down and sellers accelerating, you're going to get a change in direction. And you're going to take this trade as a short. Now, it works both directions. We work both directions, long and short, all day long. So it's not a one-sided way of trading. It is both directions. And guess what? The markets are only trending approximately 20% of the time. Go back and look at this week's charts. How many days was there a defined trend where there wasn't some sort of sideways action? Even on a very defined trend day, you're going to have some sideways action. We're going to take advantage of those sideways actions to go long and to go short intraday multiple times a day. We don't care whether we're in a trend. We don't care if we're going sideways. We're looking for this oscillation. And we're going to be going short here and going long here multiple times a day, multiple instruments. This works on not only the ES, but it works on all the futures contracts, crude oil, gold, the currencies, the 6E, the 6A, the 6C, all of those, this concepts work and work extraordinarily well. So knowing our trade location is where to trade, this is telling us when to trade, and the order flow itself is also going to tell us when to exit the trade. So let's go ahead and go to that. Let me see how much time I got. All right, we're doing good. Before we go any little further here, let me erase this one more time and just show you some of the extra things that is showing up on this chart. So you can see these green numbers. That's called the delta. That's the summation of the two. So the sellers get a negative, the buyers get a positive, and then this nets out. So on balance, there was 3,700 more contracts that were bought on the aggressive buy side than there was on the aggressive sell side. Okay, and you can see that we went from 500 to 2,500 to 3,700 to 4,600, and then we went negative. Now, 500, 2,500, 3,700, 4,600, negative. And even more interesting is the fact that this is negative. And what is this bar? This bar is an up bar. It's a green. This is a green. It's almost a doji, but it's a green bar. You're like, now how is that possible? It's an up bar, but there's net selling going on. All of you should be going, what, how is that possible? It's an up bar. Price is going up. There has to be net buying happening. And that would be why a candlestick trader is going to get faked out, and a footprint trader who can see order flow is not going to get faked out, because this is screaming price is going up, but the net balance of buying and selling of aggression is negative. We call this a delta doji. Very, very cool. Happens around the tops and bottoms. You'll see this anomaly. Huge heads up. Huge heads up. Also, the quantity of the delta. What do we find when we get above 3,500 on the ES? When we get above that, we are approaching overbought conditions. So the delta here is also screaming at me, hey, be careful, we're getting close to a top. Hey, be careful, the underlying what's going on here is that their sellers, the smart money, is already moving on, even though it's still an up candle. So hopefully about now, I've really got your attention, because this is the extra piece that many of you have been missing to be able to level the playing field. We always hear that term, but this is actually able to see order flow, what is happening as time is going forth in real time, constantly being able to measure what is going on. Now, it's very important to understand that these numbers are from time and sales. This is actual contracts that have been transacted. Why is that important? Because the order book, you see all kinds of numbers, but those are just orders. You don't know that those orders are real or not. Remember that 85% of all orders, every single time an order gets entered, 85% of the time that order will get canceled before execution. So all you guys who are watching that time, the order book, you're watching 85% of garbage. When you see an order pop up, there's an 85% chance it's going to get canceled before execution. This is none of that. This is actual contracts that are executed. This is where real money gets transacted. There's no BS in here. This is real money changing hands. Okay? Very, very important to understand that. Okay, so let's get going here. Number 3, trade management, how to reduce risk and boost profits, knowing when and where to exit. So we're going to use the exact same scenario. We got long over here. We're not going to focus on that, but we're going up. When do I get out? Well, first of all, I've got one of my levels here. So the trade location, I'm going to have trade locations that are way up above price and way below price. But these are previously known turning points or a Fibonacci number or whatever. So I want to know what price is doing when price comes in it. I'm already long, If I'm going to hold this longer, I want to see that there are buyers coming in and that the buyers are going to continue to push this thing up. And as we move into price here, First Merit, look right there, 5,400. What I say on the last one, when you get to 3,500, you're getting into overbought territory. Oh, we're coming in. I'm overbought. What's going on here? I got buy pressure, buy pressure. It's all slowing down. On top of that, you'll see this little gold thing right here. Got this little gold thing right here. This is telling me that there is retail trap going on. Retail trap going on. So this is saying, hey, all these other traders are seeing this go, and they're saying, I'm going to miss the party. I'm going to miss the party. We're coming up to this level. Maybe this is a previous high. What happens when we come to the previous high? You guessed it. I've got buyers piling in. This is a trap. So I can either go exit my position and maybe even flip and go short. But the kicker here is that this told me to get out of this long trade. All right. So now you've seen how you can use it to exit a trade. Obviously, if you have more questions, I want you to go to our support site and ask them. They'll be happy to help you out. Hopefully, you'll want to spend some time with me to master this type of trading because it is truly revolutionary. It has been around for a few years, but it hasn't been as readily available in the past. So it's very, very cool. Obviously, normally we sell this for $29.99 as a webinar special for this Thursday or this Thanksgiving kickoff. We are going to heavily discount this. I want to make you a deal, okay? And the deal is that you're going to get it for over $2,000 off for $9.95. Again, as you can tell, I'm not the best sales guy. It is what it is. It's a great, great deal. It's a third of the regular cost. Now, it also comes with you're buying a license to the software, so it has a lifetime update. So anytime NinjaTrader or TradeStation come out with a new version, you get the new version of this software for free. It comes with it. And you get 100% guaranteed trial period. Trial period, you can try it out for 14 days, and then you can give it back, and you get your money back. We don't argue with you. We don't fuss with you. You say, Troy, I want my money back. Done. You get your money back. Pretty simple. And if you'd like to even Google us and see what kind of things people are saying, because you're going to see that we stand behind it. We do give refunds. We don't just say we're going to. We actually give refunds. Very, very good. So that gives you the opportunity to put the system to work and see how it works. Again, you got that 100% Order Flow Pro guarantee completely covered. Here is the link one more time, and let me see if I can put that in the chat here. Let's see if I can put that in the chat. Oh, I'll put it in my chat, but then they'll have to hopefully they can copy that over and put it into your chat so you can see that. $9.95, very, very little risk on your part at all. If you go to that site, the other thing we can go is super simple. It's not like you have to go through a huge, gigantic, here's the link, what it looks like, and you can go right there and put in your information and download it. It comes with video training that it comes with, so you can jump right on that right away. So very, very cool stuff. Any questions that I can answer, I'll be happy to answer.
Troy, I'm going to open up the question panel for you, and I will post that link that you've just got in there. Just give me a moment. And you should see the questions now.
Okay, I'm going to go through the questions as fast as possible, and I'm sure that when I run out of time, they're going to let me know. Okay, Thomas's question is 3,500 on the Delta. So it's yes, it is on a a 15-minute chart on this chart, but in general, anything above 3,500 on any 7-minute, 6-minute, 5-minute is going to be a area of exhaustion or overbought or oversold, and that works on the negative side as well. It works primarily with futures, although we do have a Forex product that is similar. It is a separate product. Okay, so B is asking about education. So yes, we do provide education. There's a subscription education that you can subscribe to for 2 classes a week, and we occasionally have boot camps, things like that. So yes, there is additional information, additional education that can be purchased separately. You don't need that. The videos are extraordinarily good. Okay. For this particular product, there's probably about 25 hours worth of videos that come with it for each piece of the tool. Yes, there is a separate cost for the Forex product. The Forex product is completely, it's 2 separate products. It's the futures and futures only and Forex only. Okay, good question. It does not work for stocks or options or ETFs. We are working on a stock version. Stock versions are extraordinarily difficult to build, that candlestick chart that we were looking at before. If we go back to, we go to here, building this, making this display in stocks is extraordinarily difficult, because in stocks, many times you have big, huge gaps in price. Like for instance, Google or any really high price stocks, you might have 50 cents between the last trade, and it's going to say that each tick is 1 penny, and you'll have 50 area where there's 50 levels where there's no activity, because it's trading. The last trade was 50 cents before. So that is a real problem. It's a technical issue, and we have not figured out how to fix that just yet. So the futures and Forex, for the most part, are much better about that, making sure those increments are the same. So it does not work for stocks, options, or. Yeah, the license, Leonardo, the license is a lifetime license. So once you purchase the software, you'll get updates automatically. You never have to pay another. So it's a one-time fee. Once you have it, you're good to go. If NinjaTrader changes or TradeStation changes, we'll update our software and push it directly to you, give it to you. For as long as our company is in business. Obviously, we can't provide that service if we're no longer in business. But as long as we're in business, we'll have that lifetime service available. Good questions. All right, I think I've gotten most of the questions answered. Let me go back to my final slide here to make sure you can see that link. Check it out. Again, it's a very heavily discounted price for the Black Friday holiday. Check it out. You get 14 days to try it out. Money back guarantee for any time during that time. Very, very little risk to you. So what we find is a lot of people will buy it and they'll say, hey, this isn't for me. I go, okay, that's fine. And then, they are able to get out. They're not suckered in, so to speak. They're able to get their money back. No worries. Those who look at it and spend any time with it are going to say, I don't know how I ever traded without it. Because when you go from a plain candlestick where you can't see the action that's going on inside that candle, you'll never go back to it. Anyway, that's my talk. Have a happy Thanksgiving and a great rest of the weekend, guys. Thanks.
Thank you, Troy, very much. And everybody, again, the link is in your chat. you can just click there and go directly to Troy's offer. Thank you, Troy. That was great. We really appreciate it. And thanks again for being with us. Okay, we're going to just switch over now. Give us a moment. We're going to switch back to my screen. And if anyone has any questions at all from the session I did earlier, and just any questions on the market at all, we're going to have our next speaker presenting in just about 20 minutes or so. So we have about 20
minutes. You know
minutes.
what? Jonathan Rose is on with us now.
Oh, is he?
I don't know.
Okay.
Jonathan, if you can hear me, I know you just got off a plane. You want a couple more minutes to kind of get yourself settled? We can talk amongst ourselves, or if you're ready to go, we'd be happy to have you on now.
Hey, it's Jonathan. I'm actually just settled in, so I'm ready to go if you're ready to have me.
Oh, we're absolutely ready to have you. Thanks so much for joining us. I know it's a travel day for you. Let me get Vince to give you a proper intro while I give you the presenter controls. Let me know when you've got them, and I'll let you know when we can see your screen.
Oh, fantastic. Thank you.
We can see your screen.
Nice.
All right. Thanks for bringing in the baseball stuff with the cold weather. All right, Vince, here you go.
Excellent. Okay, our next speaker is Jonathan Rose, and in 1998, he began his career on the floor of the Chicago Mercantile Exchange. From 2003 to 2010, Jonathan was one of the 4 senior partners at a proprietary trading firm in Chicago. From 2010 to 2013, he was an equity options market maker on the CBOE. He developed and managed his own portfolio, actively trading 100 plus stocks concurrently. And in 2014, Jonathan joined the private family office hedge fund in the suburbs of Chicago. And Jonathan has worked with the firm's investment team, designing and implementing a pair of trade investment strategies that focuses on closed-end funds. Jonathan, really glad you can be with us here today. Thank you for taking the time. We're all really looking forward to your presentation.
Oh, thank you. A quick question. Am I going, is it 30 minutes? 30
No,
minutes?
it's 45, or as long as you want.
Oh, fantastic. Cool. Well, thank you. Thanks for having me again. I'm excited to be here. I actually was in New Jersey visiting mom with the kids for the holiday and just landed. And so back in Chicago now. So definitely excited to be here. And because this is a presentation right after Black Friday, I'm going to kind of change things around a little bit, because I was originally planning on discussing a product that I call swinging for the fences, but the Black Friday special offer that we have is more about the membership. So I thought it would be pretty cool just to explain how I'm different, and if that resonates with you, cool. And if it doesn't, that's also cool. So I'm going to say this from the beginning. I'm just going to go over exactly how I trade. It's going to be a different approach than many of you have seen. But the really important thing that I want to do is just make sure that every trade that we do, there's a why. There's a reason for being in that trade. Okay, most important, the market is constantly evolving, right? There's always new opportunities. It shifts, it updates every day. And being a professional trader, I got in the business in 1997. And what I've seen is you see a lot of people who had a ton of success, 10 years ago, 15 years ago, 5 years ago. And what ends up happening is the market's growing, the market's changing. There wasn't automated trading 10 years ago. There wasn't Bitcoin 10 years ago. Everything evolves. Business evolves. Your business evolves. And what happens with traders who don't succeed, in my opinion, or throughout my career, what I've seen is they have one approach that works, but the market's going to change. So if they're not growing with the market, they might have made money at one point in their career, but they're having trouble keeping up with the evolution of the market. So as the market change and evolves, traders need to trade and evolve with the market. Reason 2, no one has a crystal ball. I haven't had any success staring at charts. It's not going to subtly make you the Nostradamus of trading and be able to look at a chart and see all these different pictures. And once you see those pictures, forecast where the market's going. I just think it's very, very difficult. You look at these different patterns, there's not that much data that says they actually really work. A lot of the things that traders look at, they take a certain opportunity because somebody told them that if you see a double bottom, or if you see a head and shoulders, or if you see a consolidation, this is what should happen after. But if you think about it, besides somebody telling you, I don't get it. Like, what's the reason why that should work? And risking my hard-earned money, my family's money, I want a better reason to be in a trade. So what I've seen, what retail traders need, especially if you've been doing this for 2 years, 3 years, 5 years, and not where you want to be, you need a new approach. You need an approach that takes the evolution of the market into account. And so an approach that provides you with up-to-the-moment ideas, information, guidance, and also real-life help from a trader who's got market-making experience and hedge fund experience. And hello, that's where I come in. So a little more introduction. My name is Jonathan Rose, professional trader, educator, and coach with over 20 years experience. Back in '97, my first year trading, I made $1.5 million trading on the floor of the Chicago Mercantile Exchange. It was my first year in business. I was 21 years old. Since then, I've produced over $10 million and adapted and expanded my expertise as the markets have evolved. In 2003, I joined a fixed income bond trading firm. There were 6 members of that firm. We grew it to 200 employees before selling it out to a $1 billion hedge fund in 2010. And to date, I've trained over 100 traders in futures. I've become a market maker in options, and I've consulted for hundreds of clients and students while continuing to trade from home. I started Active Dater because after seeing the hacky information many self-proclaimed trading gurus were sharing online, I felt a real calling to tell the truth about trading. I started ADT in 2015, and it was really to help provide aspiring traders with real information on how to approach the profession of trading for long-term success. Now, I live in Chicago with my lovely wife. Her name is Carrie. My sons are 9 and 12, Jaden and Asher. And the newest family member, this is Mercury. I was going to throw out my standing desk, but he wasn't having any part of it. Little guy there is 7 months, 65 pounds. So hopefully he stops growing one of these days. I am passionate about the markets, but mostly I'm passionate about protecting you from all the nonsensical claims across the internet in regards to trading. So how Active Day Trader works and how it's different. Every Sunday, I share my research. And this is an example from this week. It's very abbreviated. Usually I share 8 to 12 fresh trades every week. So it's the Sunday week ahead. I share this every Sunday. I build a spreadsheet. This is what it looks like. I share the spreadsheet. On Monday, every single Monday, we do a live class. And that live class is to walk you through the trades and make sure everyone understands exactly what I'm thinking on the trades, how the trades work. When I first started Active Day Trader, I grew really fast. But what I found is everybody just wanted to come for a trade idea. And the information was very, very overwhelming for people. So people would get into a trade. If that trade worked, they thought I was smart and maybe they'd stay. If that trade didn't work, they thought I was a dummy and move on to the next person. That is so unrealistic. Trading is a profession. It's what I've done for 20 years. If you think about your profession, if I came to work for you for 3 days, would I be able to understand what's going on? Would I be able to add value to you? Or might it take 3 months, 6 months, 12 months? In order for me to teach someone how to trade, I can't do anything in 2 or 3 days. I just can't. Just being very, very straight up. There's a lot of people out there. You go on YouTube, tons of people can promise you that you'll be a billionaire in 3 days. I'm not that guy. I have no idea how to do that. What I do, and I've been doing the same thing for the last 10 years, is I build every Sunday this sheet. I research the heck out of these different ideas. I share the ideas. I'm going to go over some of these trades. I want you to understand why I think that they're good trades. And also, I'm doing this all the time. So I have a membership where people can get these trades. We talk about them Monday. But for people that really want to understand the trades, for people who want to understand how to find the trades, for those who want to learn how to fish and not just be given fish, I have a coaching room. The coaching room is where people commit to working with me for 3 months, 6 months, for a long period of time, because again, I can't help anybody in 3 days. I just can't. So let's start. Let's go over trade 5. Trade 5 is a uranium tariff trade. I'm a big believer in right now uranium. Uranium's taking out highs, trading on its actual spot price, which is the cash price. So I'm looking for uranium companies that are undervalued. 2 of them that I found were UU, and URG. We shared these trades, the date they were added, and then every week, so this was the original price that was shared, and then every week, because people haven't been, if a new person joins, they haven't been with me since July 22nd, so if they open it up right here, this would say, hey, we still like the trade, and I'm going to walk you through this trade because I still love this trade. Or it's closing only, we still like the trade, but no new entries. The price has already gone too far in the favor of the trade. There's no reason just to enter the trade right now. It's too late. Sorry about that. I was keeping up the chat rather than the questions. I'll keep up the questions in case anybody has questions as I go through it. Any members on here? Just so I can say hi to you. One sec. Oh, cool. Oh, Jody feels cool. Nice. John here. Hey, Charles, what's going on? So let's go through these trades, or let's go through some of these trades. The biggest thing for me, whenever I make a trade, that trade needs a why. There needs to be a reason of why the heck are we in that trade? Because if I'm just trading off technical analysis and someone does a trade based upon, I don't know, whatever reason, you know, if something's breaking out, that's not what I wanted. One sec. You can clear that. So if someone's making a trade because of this, you know, higher highs, higher lows, higher highs, higher lows, higher highs. Look, it broke out. This right here, I get what you're saying. Charles, what's up, buddy? But you can find 1,000 different stocks that have this. Like this isn't anything that's so novel. Like I get what you're saying that, yeah, you might see this and it's going to break out, but you have 10 different people. You're going to interpret 10 different things from that one pattern. I always tell my members, if I share a trade, depending on someone's experience, there's always going to be 10 different results for that given trade. So what happens on a trade like UUU, the reason why we like this trade is because I believe that the next round of tariffs is going to come down on the uranium industry. The US only manufactures 7% of the uranium that they use, and they import 93%. They get 25% from Kazakhstan. They get 25% from Canada. The biggest uranium players in the US are only $300 million companies. So they're really not big companies. So on 7/22, members, are you guys in this trade? Charles, Phyllis, Jody, are you guys in this? I shared a trade in UUU. I'm still long this. I love, Jody, you're in this? Cool. Great trade, right, Jody? Try to share things so you guys just know that. Shared the trade here. Cheap stock, right? $2.40. The reason why we're in it is because we're really, really bullish on the uranium sector. Even more so now because the spot price of uranium is now taking out all-time highs. Oh, Ed, you're in it too. Nice. But let me show you why 10 people have the exact same trade, you're going to get the 10 different results. Let's say you bought 1,000 shares. 1,000 shares, $2,400 of buying power, right? You buy 1,000 shares, it rallies. One person, maybe they take it off. They lock in a great profit. They lock in $1,000. Somebody doesn't do anything. Maybe this person sells 500. He buys 500 back. He sells 500 while holding 500 core position. So this person's trading around. Okay, stock market's getting hit. Maybe they're sitting, maybe they're bearish, so they don't want long exposure in their overall trading portfolio, so they decide to sell. There's so many different reasons of what you're going to do with the trade once you have them. So what I do is I research, I share different ideas, but then everybody's got to learn how to manage their overall portfolio. I think the 4Use trades over $5. I think that right now is a really good time to get into this trade because it's only going down, in my opinion, because the stock market's going down. And when the stock market goes down, everything has a beta of 1. Everything is going to move along with the market, right? The market's down 10% on Monday. All your longs are going to lose money unless you have something, whatever, something that's out of line or maybe a metal or something weird, right? There's going to be small exceptions. But overall, someone's got January calls, but your name's not on here, so I can't say your name. Someone's got January calls at you. I personally prefer to be long the stock. I don't want to be long the calls, even though the calls are working fine. For me, whenever you're long calls, whenever you're long an option, you're long volatility. So you're going to make money because the VIX is going higher, volatility is going higher. But if the market stabilizes, starts going higher, uranium starts going higher, volatility is going to come out of the market. So therefore, that's why I don't love being long calls. I prefer to be long stock. Okay? So this is one of the ideas that I shared. Another idea, or another reason for the idea, we look at gold. Gold, this is just gold futures. Okay? Gold futures. I'm not an indicator guy. I look at things very, very simplistic. Now you say, Jonathan, you're not an indicator guy, but you have an indicator on here. Well, I don't really look at this as an indicator. All this is gold relative to silver. Gold divided by silver. That's it. Right? It doesn't take a computer scientist to code this thing. It's just gold relative to silver, gold divided by silver. Gold relative to silver is the oldest tradable relationship. They're correlated. Whenever I'm making a trading decision, I use relative value. I use relative value because I'm a big believer, and I've done this throughout my entire career. Every trade that I've done had some kind of relative value component. And what that means is there is no such thing as something being inexpensive. There's no such thing as something being expensive. The new iPhone, is it inexpensive? Is it expensive? You can't answer that question. Is it inexpensive relative to the old iPhone? Is it inexpensive relative to a different kind of phone? So when we look at gold, people say gold is oversold, overbought. I have no idea what that means. Right now, gold is very expensive relative to silver. Over the last 100 years, the gold to silver ratio has traded between 15 low, 85 high. Right now, it's trading at 85. What that means is gold is very expensive relative to silver. It also means silver is very inexpensive relative to gold. So I like the idea of getting long silver because I also think that's going to be a little quasi hedge on the market getting hit. And it's turning out to be a little hedge with the market getting hit. So once I find an idea like this, that's the kind of trade that I share with my members. So one of the trades on the spreadsheet is going to be pull that back up. The uranium that I just walked you through. Gold versus silver. Silver very cheap to gold. I don't want to get long silver futures, nor do I want to share that trade idea with my membership because silver is a very expensive future to trade. Would you do gold silver spread? John, yes, I would. Excellent, John. Love it. Would you do a gold silver spread? Absolutely. Love that trade. The trade that I like a little bit better, though, is more speculative on the silver side. I like getting long PAS. P-A-A-S. PAS, and pull up another chart so I can leave this one up. So now we have a name like PAS. And whenever I'm doing technical analysis, I want a weekly first. I want the most amount of data first. Then I want a daily, and I want to slowly back into it. Right now, PAS, I like getting long because silver is extremely inexpensive relative to gold. What do you think of the silver ETF? B asks. Well, whenever I share a trade, I wake up at 5 in the morning every Sunday. It's my routine. I'm a horrible sleeper. I wake up super early, having 2 kids. I want to wake up early on Sunday because that's when I want to get all my work done before they get up, before they start asking for stuff. So every morning, I research the heck out of the market. Once I figure out that silver is inexpensive to gold, that's the trade that I want, I analyze every single name. The name that I like best is PAS. What I want my coaching students to do is when I share the name like PAS, I want them to go look at other silver names, look at gold, explore other ways to put on the exact same trade because I like PAS. B, you might do a little research on like silver. John, you might like the gold silver spread. Somebody else might like getting long options. Somebody else might like getting short options. The idea is to have a thesis. After you have the thesis, my thesis is that silver is inexpensive to gold for the reasons that I showed you. Then we look for trades to best express our opinion, but also we need trades that fit within our overall portfolio. So if somebody has long stock in their portfolio, it might make sense to just get long one of the metals because as stocks fall, metals are probably going to rise. That's what they do historically. You need to find out what trade fits in with your portfolio. Not every trade is for every person. If somebody's long 3 stocks, the next trade they should do is not buying another stock. You're fine. If you're long 3 stocks, if the market goes up, you're fine. The issue, the risk that you have is if the market goes down. So if you're long 3 stocks, the next trade you do has to be cover one of your stocks or find some way to cover your exposure to the downside if the market sells off. Does that make sense? Can you guys put a yes in the chat if that makes sense? It's a trap that I see retail traders get caught in all the time. Not every trade is for every person. As I go through this example, some might buy gold, some might buy silver, some might want to sell gold. Maybe you do a pair trade, maybe you do options. You want to be able to make sure that it fits within your portfolio. Okay. John, would it be beta weighting? I'd probably go dollar neutral. You could also do this, and this is I just held a class on this too. This is another way, gold relative to silver, right? I think we can all agree that they're correlated, right? Gold and silver are correlated. They're not going to move lockstep, right? They're not like Siamese twins, but they sure as heck know one another. What else knows one another is what about gold versus oil? So we can do the same exact analysis using gold and oil. And what I want to show you with this one, hey, Merck. It's my puppy. We just landed. We've been out for a week, and we still haven't picked him up. Right when I get off from you guys, I'm going to go pick him up because he's my guy. I'm going to put a chart next to you. Take off this little indicator. And I'm going to put on oil, CL, right? Two kinds of oil, Brent, BZ, or oil. Another common mistake people make. Hey, are you going to get short oil or long oil? Are you going to get short US oil or are you going to get short European oil? Lots of different kinds of oil. CL is West Texas oil. BZ is going to be oil found in the North Sea. Two totally different products. Gold relative to oil. You can see the relationship, and let me put it on a weekly so we can go back a little further because I want you to see that I'm only going to be able to go back here. But you can see right here, this is the cheapest gold's been relative to the oil going back to 2017. You're not going to give me some more data, huh? Even if I ask nicely. There we go. Now we go back to 2016, the beginning of 2016. The cheapest oil has been relative to gold. Okay? That's a trade idea. The cheapest oil's been relative to gold. Or it's the cheapest gold's been relative to oil, pardon me. You can all see that from the chart. It dipped down all the way here. So the trade, how to take advantage of this, is you would get long gold and you would get short oil. Now, the interesting part of this kind of analysis is if you just buy one side, if you just bought gold, you might not have made money, right?
We seem to be having. Sorry. We seem to be having some trouble with Jonathan's audio. We'll see if we can get that resolved in just a moment. While we wait for Jonathan to rejoin, I'm sure he will in just a moment. Vince, why don't we talk about the markets for a little bit? So you're expecting this week to kind of be a down week.
It just looks that way by the finish. I mean, it was a shortened week this week with the Thanksgiving holiday. We had an early close on Friday, but we did give up the earlier gains of the day, and we're still trending lower here. So looking at the Dow, we closed near the lows of the day on Friday. The S&P, same thing. If I zoom in here, you'll see quite the reversal. We are actually higher than Thursday's high earlier in the session, Wednesday's, and then we pulled back again. So it just feels that way. I mean, anything can happen. News can be out before then, so it's always a good idea to keep an eye on the futures market once it reopens tomorrow evening and into Monday morning session. But at this point, yeah, I'd say the path of least resistance is definitely lower. So it'll be something to keep an eye on.
If you're worried about this market, where do you hide?
Well, you've got to make sure that your positions are either protected or that you scale back and you make sure this is definitely not a time you want to extend yourself, right? So you want to make sure that you're trading with proper size, or maybe even a little less than what you're used to trading with, and maybe even less frequently. But again, if you protect yourself, there are opportunities out there, a lot of opportunities. And remember, this is the kind of market where if you're trading intraday, there's plenty of opportunities. So maybe you'll switch your time frame, trading from a daily time frame going down to an intraday time frame, but plenty of opportunities out there.
For those that are not familiar with trading smaller time frames, you're a swing or a long-term trader, where do you start with a shorter time frame? Do you go to an hourly, or is that too short for beginners?
Hourly is great. It's a great time frame. You can start, 30 minutes, 15 minutes. I wouldn't start any lower than 15 if you're just starting. The lower you go, the faster things are gonna happen, and your reaction to them is gonna have to be a little quicker. So get comfortable first with a higher time frame, and then start moving to the lower time frames. While we talk and answer questions here, I just want to let you know we are hoping to get Jonathan back online. So we're trying to get things reset and have him log back in. And if as soon as he comes back online, we'll switch back to him and finish off his presentation.
Tell me the number one mistake that new traders make and why they go broke.
Following someone else's tip or trying to take on
you can't follow hot tips.
Trying to take on a little more.
Isn't that how George Costanza made his money in
That's right.
that Seinfeld episode where he said, I cleared what, 8,000? It's a Hyundai.
Exactly. I mean, so often people jump in and try to bite off a lot more than they can chew. You got to take this one step at a time. This business is a process, and sure, there's opportunities to make quick, big profits, but most people who have been at this for a while and have done so successfully will tell you that the slow and steady approach is really the way to go.
All right, so we do slow and steady. If you had to pick a certain instrument to trade, what would you do? Would you keep it simple with options? With just trading stocks or going short on stocks, or would you look at options and simple strategies?
Oh, I would absolutely look at options. They see, the thing about options, once you know how to trade them, they not only allow you to reduce your risk overall, but they also allow you to leverage your positions very safely as well. So I much prefer options. Trading stocks, sure, it's very simple to understand at the beginning and trade, but you have full exposure to the market. So the actual ideal thing to do is to combine options with stocks. That really is the ideal situation.
Okay, Jonathan is back on.
Excellent. All right.
Did you know Jonathan is a triathlete?
I did not, but that is impressive. I now feel a lot worse about myself.
I do. I feel inadequate as as
Yeah,
we're
back
waking
on.
up from our food comas. Jonathan is probably dusting off a 5K run. All right, Jonathan, is trading a marathon or a sprint?
It is a sprint, fellas. My apologies. Out of my control. I think my computer was still in a turkey coma.
No worries, no worries. You get back to it. Take as much time as you need.
Thanks.
Oh, fantastic! Thank you again, so guys. Sorry, everybody. Obviously, out of my control. But I was listening when I hopped on. I agree, guys. Stocks and options. Stocks and options. It's interesting. Options are stock, and stock are options. Options are just a derivative of stock. It's all it is. So what options give you, and I'm going to kind of segue a little bit because I love this topic before I go back to my gold, silver, but an option, if we put up Apple here, options are, so great comment. Option says options are difficult to learn and to master. For one thing, anything is difficult to master, right? Let's forget mastering it. People who trade options, anybody can learn to trade options, guys. You really can. There's a lot of people who I've traded with who are really, really good traders, who kind of learned from the school of hard knocks, who never even graduated high school. So when it's about trading, it's not that the material is hard to learn. It's just not. It really is not. And maybe you just need somebody to simplify it for you. What's hard in trading is, do you have the temperament? Can you stick to your rules? Or are you going to change because all of a sudden the market's moving a little bit? Okay. B says options have too many parts. Let me break down options for you a little bit. Okay. Let's look at a stock. I want a lower price stock. Let's look at Intel. And here's how I teach options. Intel's trading for 46. You could buy Intel right here. What an option does, guys, all it does, the 50 strike gives you the option to buy that stock at 50. That's all an option is. Why would I want to buy the stock at 50 when it's trading for 46? Why would I want to do that? Because I get massive leverage to do that. The person who buys the option, if I buy a 10 lot, I'm long 1,000 shares from 50. At expiration, if it's trading above 40, if it's trading below 50 or 49.99, do I want to be long from 50? Heck no, right? So the exchange knows that I have common sense and they're not going to exercise my option, because if the stock's at 49 and I'm long stock and I'm long the 50 calls, I don't want to be long 50 calls. So those go out worthless. That's it. That's what an option is. Options are a derivative of stock. For those out there, and I believe this unbelievably strong, if you're not trading options, it puts you at a very, very big disadvantage, because Intel, you can buy the stock and sell the stock. That's all you can really do, right? I can, with options, I can buy the stock at any price I want. I could sell the stock at any price I want. I get odds to do that. You need to be trained to learn options so you have the ability to know if something is undervalued or overvalued. And again, we do that relative to different things, relative to how it's historically traded. That's going to be historical volatility. Relative to where you think it should be trading, that's going to be your theoretical volatility. Relative to where it's trading right now, it's the implied volatility. We might look at Intel relative to how the other chip stocks are trading with a similar market cap. So that's all we're really doing. But options, not to get a little corny, but they give you options. They give you more flexibility. So therefore, if you're trying to learn options and you're trading, but you don't feel comfortable, stop trading and learn. Put in the time. None of us started trading the day we learned. Impossible. Think of it like your job. Real estate brokers out there. If I went around with you for a couple of days, am I all of a sudden going to start, slinging houses and closing sales? It's going to take me some time. I got to learn the tricks of the trade. I got to learn how to sell. I got to learn how to build relationships with my customers, I guess. I don't know. Trading's the same thing, but too many people will dive right into it and think that it's gambling. Think that, oh, they can make money doing this. And so again, if I take you back to exactly how I set up Active Day Trader, I set up Active Day Trader in a way that I'm going to share my research with you. I'm happy to share my research with you every Sunday. Every Monday, we do a 45-minute class where I walk you through each one of these trades, because I don't want you to all of a sudden put on a long oil trade or a short gold trade or vice versa unless you understand the reasons for being in that trade. You need to understand the reasons for being in that trade, because if you don't, you're not going to be confident. You're not going to believe in that trade. You might get out of that trade because it goes against you. But others with a strong reason for being in the trade might look at that as a great opportunity. Here's a great example of a trade. If we look at DocuSign, okay? DocuSign IPO'd back here for whatever, for like $25. When a company IPOs, they have what's called a lockup period. So D-O-C-U. I'll go through some other IPOs so you can see this happens in mostly every IPO. If I own DocuSign and I want to go public, I go to an investment banker and I say, can you value my company? I want to go public. We think your company's worth $500 million. So what we're going to do is let's price the company at $50 a share, and we'll put out, or $5 a share, we'll put out 1 million shares. $5 million, let's say. Okay, I said 500, but let me use 5 million so I don't mess up the math. $5 a share, we'll put out 1 million shares. Your company's going to be worth $5 million. If all of a sudden you go public and the company doesn't want to buy your stock for $5 a share, they think it's worth $3 a share, so $3 million, that's very, very embarrassing for the underwriters. So what companies do when they go public is, if they have 1 million shares, they only release 200,000 for the public to trade, and they restrict the balance of those shares. They restrict the balance of those shares because they don't want early investors to sell on the opening. So if anybody works for a company that went public, you weren't allowed to sell your stock for 6 months because your stock was restricted. Every IPO does this. So what they want to do is company rallies after it goes public, but all of a sudden when the IPO, when the restricted stock comes out 6 months after, rally, it falls off a cliff. Okay? If I go to any stock that IPO'd, Roku, rally, well, this is rally, falls off a cliff once that restricted stock comes out. The name on the spreadsheet that we have, and we had Docu on the spreadsheet, the name that we have right now is PS, Pluralsight. Rally, they're supporting it. It's artificial. Not all the stocks available to trade. Okay, this is a big boy trade. I get it. Not everybody is familiar with this trade. The most important thing, though, is I want you to understand the why. I want you to understand that I suggested to my members to buy the 25 strike puts in Pluralsight that goes out to January because the lockup is coming up. When the lockup comes up, there is an avalanche of supply coming to the market, and there might not be the necessary demand. And that's why if you go back and look at any IPO, and I encourage everybody to do this, go back and look at, you name it, Twitter, GoPro, anyone, they're all going to hold their IPO price. They're going to rally. They're going to mess around, rally a little bit. But once that restricted stock is set loose 6 months after, the stock falls. It happens all the time. B is just asking, how do we learn options step by step? Most programs throw out all option strategy to newbies. It takes time. You need to keep your head up. If you're unfamiliar with options, another big thing that I teach, which I don't see a lot of people teaching, is something called scalping gamma. Scalping gamma is when you have an options position, being able to manage that options position using different stock. So if you're long calls and you're long 10 of the 28 strike calls, you're long 1,000 shares. If you bought it when the stock was down here, you're long 1,000 shares of stock. Okay, you did that trade because you got massive leverage. If the stock didn't get above that price, you would not be long 1,000 shares. You would lose 100% of the money that you invested, and your options would expire worthless. The thing that I love so much about buying options is you can buy options and you know exactly what your risk is going to be. If you're long 10 of the 28 strike calls and the stock rallies, don't sell your options, sell stock. Sell 300 shares, sell 300 shares, sell 300 shares. Don't touch your options. That's getting a little bit more advanced, but you can grow into this. And options give you options. They give you so much more flexibility than just trading stock. And I thought I knew options pretty well, but in 2010, I put $350,000 into a trading account and became a market maker on the floor of the Chicago Board Options Exchange. If you want to be a market maker, it just takes money. That's all it takes. You can go get a job, you go work with a firm, or if you have money, go put some money in a trading account and go trade options. I thought I knew options before that. I got down to be a market maker and I realized what I didn't know. I realized how foolish I was in the past. So I ended up hiring somebody that I worked with for 6 months who was a successful market maker. I did whatever he asked because I wanted to learn. And because of that, I was able to be a market maker, but still with the 10 years of experience before that, I had to take that time off. I had to sacrifice, not make any money, put in the work, put in that 6 months of work so I can trade options for the rest of my life. Okay. Question, should newbies start with covered calls? Newbies shouldn't trade, they should learn. Newbies shouldn't trade, they should learn. So what I want to do is, because it's Black Friday, I want to share with you the best offer that we've had all year. And so what I'm going to do here is I'm going to put this into the chat, and when your time allows, read it whenever your time allows. It explains exactly how the membership works. I'll reply to B with this page. You can just click on it, and then I'll walk you through, because it explains exactly how the membership works and the Black Friday offer. And here's the Black Friday offer. Again, I have an annual membership. That's where I share trades every Sunday. And on Monday, we have a live class. Every single Monday, like clockwork. On Friday, we do a week in review where we go over the week. During the week, when there's something to be shared, I share Premier member alerts. If something's moving a ton, if we have to manage our position, if we do anything, if I'm getting a lot of questions on the same topic, I'm going to send out an alert to everybody. Okay? For anybody who'd like to join the membership, it's an annual membership. It's $9.97. Because of Black Friday, I'm giving away a ton of bonuses. A ton of bonuses is the swinging for the fences, which I planned on presenting on today. This is, I sell it for $297. Included in this is a live class every single Wednesday. Charles, thank you for sharing. Charles has been a coaching client for a long time, and now he's a lifetime member as well. This is the best deal that we've ever had. The Swinging for the Fences includes a monthly live options class every single month. After 2 years, you'll have 24 classes. If you can't come, you'll get the recording. If you can't come, you get the recording. Unusual options activity. It's all about the only indicator that professional market makers use. As a professional market maker, to value options, all we did was use unusual options activity. This is something that routinely sells for $4.97. This is included in the annual membership. For those that are willing to commit for a little bit longer, and I'd like you to go through and read about exactly how the membership works and also take some time. You may want to go through my YouTube channel. For those who are unfamiliar with me, YouTube channel, it's Active Day Trader. My name is Jonathan Rose. Just search that. You'll learn exactly how I teach. See if it resonates with you. The longer that you're willing to commit, the more I'm willing to commit to education. What I found, and I'm a data geek, I think data runs the world. I found that when people come to me for 1 month, they don't stay because my information can be a little intimidating at first. I'm also going to strongly suggest that you don't trade for 3 months. Take it slow, super slow. Take it slow now so you're in a strong position later on. I want to educate you. There are no indicators besides that little like 1 divided by the other. I'm never going to show you, hey, look at this guy's awesome equity curve. That's BS. Anybody can show a line. Look at this equity curve. Wow-wee. I want to teach you. 10 traders get the exact same trade every single time. You're going to have 10 different results. So hopefully you can access that. Fellas, if you wouldn't mind sharing that link in the chat. I don't have access to the chat. I would appreciate it. Stay on if there's any questions, but if not, that's what I got, guys. I appreciate your time. My fault, or not my fault, but my apologies again for going offline. That was a little embarrassing. Now I gotta go pick up my puppy that I haven't seen in a week. Okay. Thank you very much, Vince. Thanks.
Thank you, Jonathan. That was great. Thank you so much for jumping off a plane and getting on immediately. We really appreciate it. Again, the link is in the chat folder. We'll put it in. What's in the question panel? We'll put it in the chat link as well.
That'd be great. Thank you.
And thanks again.
Wait, before we let you go, Jonathan, we want to have a little bit of fun. You ready? We're gonna need like 2 minutes of your time. With apologies to Family Feud. I got 9 top answers on the board, and the audience can participate as well. Name something you haven't done since high school gym class.
Wow. Aerobics.
Aerobics.
Oh,
exercise.
Wait.
Okay, that's a 9th answer on the board.
Wait, I'm sorry. I thought you were asking me. You want me to guess the audience's answer?
No, I want you to guess typical 100 Americans because the number 1 answer is definitely not you.
Okay. But my misunderstanding. I was saying it to me. The number 1 answer, what you haven't done since gym class.
Yes. Okay, B's got one of the answers. She says swimming. Yes. Swim laps.
Oh, climb rope, isn't it? Climb rope?
Dawn's
got one.
With a climb rope.
Yeah.
Great answer, but not on the board.
I'm thinking change in a locker room.
Change in a locker room. Very impressive. Number 7.
Hold on, Brad's got number 2.
I went out of the box a little bit.
John's got towel snapping. Didn't make the board, but should have.
I was thinking along with Charles, more of like, showering with, same sex.
Brad came in with dodgeball. That
was
number 2.
Is number 2.
Yeah.
Push-ups was also on the board, 3rd one. You want to know what, Jonathan, the number 1 answer was?
Yeah, pull-ups?
Run a mile.
Run a mile. Yeah, that's not. I wouldn't have guessed that, but no,
doesn't apply to you, obviously. Well, listen, this was a lot of fun. Thank you so much for joining us. I hope we can have you on again.
My pleasure. Thanks for having me, guys. Thank you very much.
Okay, take care.
Bye-bye.
All right, that is Jonathan Rose. We hope you enjoyed that presentation. Vince, before we wrap it up for the day, we had promised everybody here that we'd sort of go back and wrap up your presentation because we ran out of time towards the end there. What did you want to say about options and the training course that is coming up on Friday?
So to follow up on Jonathan's comments, he's absolutely right when he says you need to learn. So take your time and take it one step at a time. You don't need to learn everything there is about options immediately. That's obviously the wrong approach. You want to do this one step at a time. That's why earlier when I showed my slide of all those different strategies, I said, find one that you're comfortable with, learn everything you can about it, and then once you're trading that, like it's second nature to you, then you can go and read something else. So start with calls and puts, just the basics, and it'll take you a long way. You really don't need to go beyond that right now. So Jonathan makes a great point. Again, the link for all the presentations today should be, or all the offers today should be in your chat box. I'll just reiterate our offer. If you go to tradingwins.com/black, we're having a live class next Friday. That's November 30th, 10 a.m. Eastern. It will be recorded if you can attend live, but hopefully you can join us live. I'll go over the basics of options once again. We'll talk about those calls and puts, what they are, how to use them, when to use them. But we'll also take some time and get into some of the more complex strategies for those of you that are beyond just calls and puts right now. We'll talk about credit spreads. We'll talk about butterfly spreads, delta neutral strategies. More importantly, we'll talk about repair strategies, which will apply to everyone here, and show you how to take advantage of those longer term trends using leap options, which are basic calls and puts, but with a much longer term to expiry. Of course, with this offer, you'll get 30 days of our Trading Wins Pro service, and you'll also get 30 days of the Tactical Trader platform that had those unique tools, the seasonality scanner, the earnings scanner, the Fibonacci tool, all of those. So hopefully you can join us for the class live on the 30th. If not, at a minimum, see the recording. This is a $7 offer, our Black Friday special, tradingwins.com/black. And again, for Troy Epperson's offer and for Jonathan's offer, the links are there for you in the chat.
All right, that wraps up another Thanksgiving event here for us. We're looking forward to doing another one in 2019. We do have a super conference coming up December 8th and 9th. We'd love to give you details on that. We'll send those out to you by email. B says, thank you, Vince. B, thank you so much for joining us. Vince, before we go, I'd be remiss if I didn't ask you a hockey-related trivia question. And help from the audience. There's quite a few of you that are still here. You're welcome to help, Vince. All right, you ready, Vince?
Sure.
What goes all around a hockey rink but never moves?
The boards.
The boards.
Look
at that.
Come on.
Okay,
make it a little more
come on.
challenging.
You have to have seen that one before. All right. You folks can challenge Vince with a trivia question on the next market chat, which happens Monday evening, 8 p.m. Eastern, 5 p.m. Pacific time. That is it for us. We want to thank you for joining us. Your participation, your interaction, always appreciated. Have a terrific holiday weekend. We'll see you very soon.
Thanks again, everyone. Take care.